Next up today, it's our sound advice. And last week we were talking about interest rates on the rise. And today we're going to look at the impact on the property market of that. Charlie Landin presents Moving Home with Charlie. He's the founder of bestagent.co.uk. Here with our sound advice today. Hi, Charlie.
Hi, Danny. How you doing?
Yeah, very well today. Thanks a lot for coming in and sharing your expertise with us today. So first of all, let's just talk about that shift again in interest rates and what that will do to the mortgages that will be available.
There was a story out on the Times and on the Guardian, and basically, if you want to look at just what the facts are, so that people haven't got to worry about anyone's opinion, there are 2.4 million people coming to the end of their fixed rate mortgage period in the next 18 months, so by the end of 2024. That translates into around about 120,000 people a month on average over that period, coming to the end of the fixed rate where they're going to have to refinance or remortgage. And to put that number into context, that is about 30% more than the total number of housing transactions happening per month at the moment. Okay. Now, nobody knows how many people are going to be forced into doing something that they want to do because their mortgage payment's gone too high. So, for example, forced into downsizing or forced into selling altogether or forced into refinancing some of the way that they didn't want to do because their mortgage payments now become unaffordable. But some portion of that 115,000 people a month who are having to come to the end of their fixed rate period and remortgage are going to be in a position where they're forced to sell. So when you put the numbers, I'm discussing here what's likely to happen with house prices, because of course, when you start to get forced sellers, even if it's what I call voluntary forced sellers, so they're choosing to sell before it's too late, you're going to see more and more property coming onto the market. Now, the number one thing people need to understand, if you're in that position and you're worried about what rising interest rates are going to mean for you and your chances of keeping hold of your home, is to understand when it comes to prices that the prices you see in the house price indices, especially the land registry, which is the only official one, have around about a 6-month time lag on them. And I, as a supplier to estate agents, I provide technology to estate agents as well as the other things that you mentioned. I talk to agents on a daily basis, and I've got my finger on the pulse of what's happening at the coalface. So as a very, very broad rule of thumb, and yes, there are regional exceptions and exceptions on exceptional properties and stuff, but as a broad rule of thumb, house prices are already between 5 and 10% lower than is currently being reported, if you factor in the time lag. And the reason I want to make that clear is that if you need to sell, if you've got no choice but you've got to sell, the biggest mistake you can make is innocently putting a house on at a price that's already too high while the market drops away, because you were unaware of this time lag and the fact that house prices have been falling for some time now.
And the effect of that is you won't get people through the door to come and look at your house.
Exactly right. And if selling is essential, the key thing to do with your asking price, because remember, your asking price is not a commitment, okay? If you price it lower than people expect, you'll have people through the door in your house, competing bidders, and you'll find out whatever the market will actually support for your property today. Okay, so that's whatever the market's doing, whether it's going up, whether it's going down, the only way to know you've got the best possible price when selling is by having at least 2 buyers competing for your home. And the way to get competing buyers in is to price it attractively in normal times, but aggressively in this market. And the key to advice on what that price should be is finding an experienced local agent who's been through downturns before and who's got the expertise to get your property sold when many other people will be languishing unsold on the market.
And we all know sort of who the agents are in the areas where we're currently living. If you're moving to a different area, perhaps sort of do some research and speak to some people about who the kind of agents in the know are in that area.
Well, when you're buying, unfortunately, you haven't got a choice of the agent you're dealing with. The choice of agent only happens, you only have a choice when you're selling. So wherever you're selling from, I mean, you say that people know all the agents in their area. Actually, in reality, people tend to know about 20% of the agents in their area. And there are far more if you look. And it's important to talk to as many as you can. And make sure you don't fall into the trap of false promises of overvaluing your house. And golden rule, do not sign a long sole agency contract with an estate agent in this market. You're the customer. You can set the rules. So if you find an agent you want to go with and they say, by the way, we're going to lock you in for 3 months, you say, no, sorry, 4 weeks, maybe 3 months, no. And if that's a deal breaker, then I'll go to another agent.
Just on the side issue of the sort of following the market trends and the way the prices are moving, a 6-month lag in a world of instant data seems like a very long way behind.
I know, and this is what catches so many people out. There really is a very big lag. I'm sorry?
Should that change? Should that be more real-time values?
Absolutely. But the thing is, you've got to remember that even the legal process between when a price is agreed and when a property sale exchanges is about 4 to 5 months at the moment. Which definitely that could be improved, but it's easier said than done to improve that. So that's a large part. I always say there are 3 types of house prices. There are asking prices, which are just conversation starter fantasy, right? There are agreed prices, which is the prices being agreed at the coalface today between a buyer and a seller through an agent. And then you have the actual prices, which might be subject to a revision or a fall through. And then the actual prices, which the land registry is the only place that reports on those, has a 2 to 3 month reporting delay on top of that 4 to 5 month conveyancing delay. So you're talking about 6 to 9 month delay when the official land registry prices come out compared to what's happening at the coalface today.
Okay, let's go back to people who might be coming to the end of those deals. You say 115, 120,000 people a month coming to the end of their fixed rate deal, which they may have fixed 2-3 years ago, 3%, 2%, whatever it was. What's the advice on what to do next, considering that with the rates going up last week, mortgage companies and banks will be adjusting their mortgages accordingly?
Yeah, and that looks set to continue for a while. Actually, they're going to be creeping up for the rest of this year as the Bank of England continues to increase its interest rates, which is expected. So every single homeowner's position is unique. Their personal finances are unique. Their personal requirements are unique. And that's why, contrary to what the government says, which is talk to your lender first, talk to an independent mortgage broker first. So that is what I would do, because only by doing that can you find out what your options are. Your existing lender will only tell you what the options are that they can offer you. An independent whole of market mortgage broker will have many more options for you, including other products from other lenders that you may be able to switch to. But I urge people not to delay when doing that, because the longer you wait, the greater the risk that your home falls into negative equity, at which point you cannot refinance it. All right.
And for people who don't have to remortgage immediately, but with the rates creeping up, say they're on a repayment mortgage, their current mortgage payments are going up, is there anything you can do to alleviate that, to spread the cost of that, reduce your monthly outgoings?
Yeah, I mean, the very first thing I would be doing is, if I had any high interest debt or loans or credit cards, I'd be wiping those out first and foremost, because paying high interest is the worst form of money going out the door. So that'd be my number one step. Number two, obviously, you make cutbacks where you're comfortable making cutbacks. The government has a scheme called the I can't remember what it's called, but it allows you to rent out a room to a lodger, and you can make up to £7,500 a year tax free. If you rent a furnished room out to a lodger, that could well keep the wolf from the door for some people. But otherwise, I mean, what everyone's being forced to do. I had one of my followers message me this morning saying, he said he acknowledges that he's in a much more fortunate position than most, but he's going to have to take his children out of school. They're in a private school. That's the end of that for those kids because of mortgages. And that, so there's no one not being affected by this, is my point of that little anecdote, right? It's everyone is being affected by this. Everyone, almost everyone, except for the very, very wealthy. People across the spectrum of income are being affected by this.
And things like taking a payment holiday, or going to an interest-only payment scheme for a while, or extending the life of your mortgage, are those all viable options?
Well, each one of those needs to be considered very carefully. Okay, if a 6-month payment holiday makes the difference between you being able to keep your home and not keep your home, then obviously that's a great thing. Extending the term of your mortgage is a very, very big decision and commitment, because although it might allow you to keep your home, you are going to be saddling yourself with substantially, not just another 10 years or whatever of mortgage payments, but I think the figure is, for the average mortgage, something like £80,000 more interest to pay by extending the. So you need to just weigh it up. Yes, of course, some people will be able to reduce their monthly payments and therefore stay where they live now by extending their mortgage, and that might be what you want to do. You may not want to move, but some people might look at those figures and go, when I work out what I'm going to be paying extra in the full, maybe downsizing is a better option. So look at those options. And again, it's a personal choice, because whilst the finances become an imperative, they become an unavoidable fact of life for you. There are other factors in your life about where you want to live, who you want to live with, who you want to live close to. And so perhaps it's a good time to reconsider a lot of things, not just should I extend my mortgage, but yes, of course, that's always an option.
Charlie, thanks. Where do you find Moving Home with Charlie?
And if you just search Google Moving Home with Charlie, it's on YouTube, it's on Twitter. I tweet daily, moving_Charlie, and I'm on YouTube several days a week, live streaming, taking people's questions about their moving situation, and on bestagent.co.uk as well, where I've got all the properties and agents to find too.
Appreciate that. Thanks. Speak to you again soon. Thanks, Charlie.
Thanks, Danny. It's been great. See you next time. Bye.
Cheers. See you next time. Bye. Charlie Landon there on our sound advice.
Thanks very much, Charlie.
You're welcome. Thanks, Callum.